I want to highlight these assumptions and I want to do the selling points of the deal about why ours are conservative. Also, in this environment, investors really are more concerned about the risk. They're really concerned more about the loss of capital, not so much on the return. Question number 8, if you're an LP, is how is the operator going to educate you about the investment? How are they going to help you make better investing decisions? If you're a GP, how are you going to educate your investors about the investment? Now, in addition to buying right, using all of the conservative underwriting we talked about earlier, the real lesson from the Houston foreclosure is to educate your investors so that they can make better investment decisions. Now, it appears that Apple's Way attracted less sophisticated investors, and they were less likely to understand that a 21% IRR doesn't seem right. It just seems too good to be true. An educated investor would have asked Apple's Way if they are buying an interest rate cap, for example. And if that would be my first question, it's a bridge loan, cool. All right, do you have an interest rate cap? Well, what is it? They wouldn't have known to ask that question. Now, it's okay to attract unsophisticated investors. That's okay. We want to open up, Main Street and real estate to as many people as possible. But if you do, just to make sure you educate them before you ask them to invest. At the end of the day, an educated investor is a better investor. And also, at the same time, I think it's really important as a GP that you give your investors insight into your underwriting assumptions. I don't know if Apple's Way did that, but we always do it because we want to highlight where we're conservative, right? So if we're not showing a 21% IRR and ours are only 14.5%, the reason is because we're putting our deals in a particular risk-adjusted return category, okay? And we want to be maybe on the lower end. And so we want to show them why that is. Why is the return lower than some ground-up development? And so we're going to highlight those assumptions. But it's really important, especially if you're an LP, to ask questions about these critical underwriting assumptions. To me, if I'm a GP, I want to highlight these assumptions and I want to do the selling points of the deal about why ours are conservative. Also, in this environment, investors really are more concerned about the risk. They're really concerned more about the loss of capital, not so much on the return. So I think it's going to be easier for you to raise money if you actually highlight the risk. If you say, look, there's some risk involved here. The risk could be that it's going to take us longer to turn the units. But the way we're mitigating that, we have a really, really experienced general contractor we've been working with. Right? Another risk could be X, Y, and Z, but we're mitigating it like that. Now, you're being honest about the risk, but you're also showing your investors that you know what the risks are and what you're doing to manage them as well. Now, our investment company, Nighthawk Equity, spends an enormous amount of time and money creating educational content for potential investors every single week. And this podcast is certainly an example of that as well. Now, I brought up Nighthawk a few times here. If you're listening to this here, limited partner, or you're interested in alternative investments in real estate, we'd love to have a conversation with you. So just head on over to nighthawkequity.com and you can schedule a call with us on that website. We'd like to get to know you a little better and see which one of our opportunities might be a right fit for you. And then, we're going to answer your questions, educate you about this alternative investment class, which I think is just the best there is in the world, far better than stocks, obviously crypto and a bunch of other things that are out there. Multifamily syndications are still the best investment vehicle. Would love to share that with you. So head on over to nighthawkequity.com and set up a call with you as well. So really the question is how willing, back to education here, how willing is the operator to answer your questions? Now, do they welcome your questions or are they annoyed by them? So to me, it should be a red flag if an operator is unwilling to answer your questions or they feel annoyed by you asking them questions.